Okay, so now let's look at task C and the assessment of competence on this particular script. So the candidate starts with salutations. Hi, Bridget. I have considered the proposal to buy back shares and have detailed my thoughts below. So remember, in order for us to assess, competence, the candidate needs to make sure that they've covered all aspects of the task. So have they then, responded to Bridget with the high-level legal requirements? Have they then discussed key issues, and have they given any other governance concerns that would need to be considered? So when we are reading, we're looking for evidence that all those three aspects have been addressed, and as well that there's good understanding demonstrated for those aspects that are there. So if we look at this, they start off by referring to Section 46 Companies Act. So then we know we are looking at the legal requirements. What are they then saying in relation to the legal requirements? And just before we get into that, I think having headings can also help. But if you do not have headings, we assess and read what you've given and then categorize it as per the right aspect of the task. So in this case, this is the legal requirements, which is the first aspect of the task. The candidate then says, in order for OT to make a distribution, it would need to adhere to Section 46 of the Companies Act. That is that the distribution can only be authorized by the board of directors, and it reasonably appears that OT will satisfy the solvency and liquidity test. So here, if we look at the advice that's been given to Bridget here, they're saying to Bridget, you need to adhere to Sections 46 of the Companies Act. Then Bridget will be like, okay, but what is Section 46 of the Companies Act? The candidate then says, in trying to apply that, the distribution can only be made if authorized by the board of directors. Now we need to take a step back there and ask if this is really, good and clear advice that would show understanding of Section 46. And at this stage, it's very doubtful that the candidate understands really what the requirements of Section 46 is. Because the requirements of Section 46 is not for a distribution to just be authorized by the board of directors. It must be authorized specifically through a resolution. And this candidate hasn't shown that. Because if Bridget just goes and gets authorization from the board via email, that will not be sufficient for a resolution. So the candidate needed to be specific to say there must be a resolution, because that's what Section 46 requires. So in this case, we are actually not seeing good understanding of Section 46 in the Companies Act, and the advice given to Bridget falls short, because if Bridget just goes and gets authorization and it's not a resolution, Bridget would not have met legal requirements in relation to Section 46. So at this stage, we cannot say or give credit for valid discussion for Section 46. Then they further say it must be or reasonably appear that OT would be able to satisfy the solvency and liquidity test. So then we look for application and good understanding of what solvency and liquidity would entail. In this case, the candidate starts off to say, well, for solvency, the assets fairly valued must exceed liabilities. Okay, where is the application in relation to OT? Then they say, as per the forecasted figures provided on OT's assets, they do exceed the liabilities. Therefore, OT is solvent. So remember that the forecasted figures were actually not the fair value of those assets, right? So what the candidate has said is the starting point would be to look at the financial information provided, which is good. And they've said from the financial information, the assets exceed the liabilities, which is good. But the candidate does not go a step further to say, we need to assess the fair value of those assets and then discuss some of the fair values of the assets and what fair value would consist of if they look at the fair value or if they look at the assets of OT as listed in the financial information. So yes, they start off correctly by comparing what they have in the figures, but then they forget that it's not fair value. So the application also falls short. Then they talk about the liquidity, which is OT being able to pay their debts. in the ordinary course of the business. Then they acknowledge that there is no clear guidance in the Companies Act to calculate liquidity. However, the current ratio could be considered, which is very true. Because remember, if you go to the Companies Act, it says for assessing liquidity, there are various things that could be looked at, and it gives indicators of what would signal an entity that is not liquid. And some of the indicators are the current ratio, but the Companies Act is very clear to say you cannot just conclude based on one of those indicators that they give. The company and every company would need to assess liquidity in different ways by taking into account, all of the commitments that they have. So not only their current ratio or their current assets exceeding their current liabilities, but also what is the cash flow projections, for a couple of years, maybe a 5-year cash flow projection to prove liquidity. So this candidate, what the candidate is saying is, yes, there are things that we can look at, and therefore we need to look at some of those aspects, which is correct. So then they say, okay, so the current ratio could be considered, which is valid. And what they've done is that they would then say this is to check the current assets of OT if they exceed the current liabilities. Do they apply it? They apply it to OT by saying OT's current assets do not exceed current liabilities, which is very true. Because if you look at the financial information that's given, the current assets do not exceed the current liabilities. So yes, they've identified a possible indicator, which is the current ratio, and they've applied it to OT. But unfortunately, what the candidate then does, which then results in a question on whether they completely understand how to assess liquidity as per the Companies Act, they go further to say, therefore, because of the current ratio being negative, OT is not liquid and would not be able to make the distribution, which is not true, which is not good demonstration of understanding what the Companies Act is saying in relation to liquidity. The Companies Act can never prescribe that an entity whose current assets do not exceed current liabilities is illiquid, because that is not true. One can have a position where the current assets do not exceed the current liabilities, but if they look at other forms of being able to get cash into the company could still be able to pay its debts as and when they fall due. So it's about looking at what is it that the company has as it relates to being able to make payments as and when they fall due. And sometimes the current assets and current liability as a ratio is not telling of whether or not the company is able to make debts as and when they fall due. That's an accounting concept, but it doesn't mean that the company will not be able to make its payments. So that is why the Companies Act can never be prescriptive or can never limit liquidity to the current ratio. There are other things that could be considered, whether it's a cash flow projection or whether it's a guarantee from the holding company to say we will give you cash if you run into problems or if you are not able to make your payments in the ordinary course of the business. That counts towards showing liquidity. So what the candidate does is they start off well, but unfortunately, towards the end, they actually demonstrate they don't understand liquidity, because liquidity cannot be solely based on the current ratio, which becomes problematic because the advice then given to Bridget is not completely correct. So then if we look at that first section, that's where they give the legal requirements. And I mean, we were not convinced. We're not convinced by the authorization or the resolution was missing. So we cannot give credit for section 46. We're not convinced by the discussion on solvency and liquidity because it's not technically correct and sound. So it's missing other aspects. So, and that's all they give under the legal requirements. So at this stage, there's questions in terms of whether this candidate really understands the legal requirements as it relates to distributions. Then they further say when making a decision to declare that OT has satisfied the requirements of solvency and liquidity test, the director should consider whether they will be acting in the best interest of the company and not for their personal gain. Now they move into key issues, because the key issues, remember, the second aspect of the task, they said, or Bridget said, what are those issues or key issues that the board would need to consider before making the distribution? So they're saying here that the board would need to consider whether they're acting in the best interest. So this tells us that they're talking about key issues, or they're trying to address key issues. But unfortunately, in how they're trying to address this key issue, which is acting in the best interest of the company, they fall short. They don't give us application to OT. You know, the candidate does not show us why they think the distribution is not in the best interest of the company. You know, they're not showing us that discussion, and therefore there is no application, and it actually just means the candidate has listed the theory of what would need to be considered without application. Then they say the director should consider whether all stakeholders could benefit from the decision as per King. Okay, so again, we're talking about key issue, we're talking about governance. Remember, the two could be linked. So now, the unfortunate part is that they list the principle as per King, which is stakeholder inclusivity, but they don't apply. What makes you think that the directors are not acting in the or the directors are not considering a stakeholder inclusive approach in this decision? What is it in the case study, in the information, that makes you see that they're not considering a stakeholder inclusive? The candidate again does not apply, which is very unfortunate. Then they further on go on to say it is important to note that Serge is a CA and he is bound by the SICA code, and the decision on whether OT should buy back the shares could present him with a conflict of interest. Okay, so maybe they're trying to discuss the principle of conflict of interest. Have they applied it well? Because remember, as it relates to conflict of interest, the candidate needs to show understanding that the conflict would need to be disclosed, and that the person that's conflicted cannot be part of the decision to make the distribution. So they cannot vote on the matter. Does the candidate really give us that application? If we read what the candidate has said, that application is not coming through, because all that they've said is that Serge may have to choose between the buyback to protect himself or to not distribute anything and protect OT. So again, you're like, okay, but you've identified conflict of interest. The principle behind conflict of interest is disclosure and not voting in the matter, but they're not saying that. So unfortunately, they cannot or we cannot also say they validly discussed the conflict of interest and the implications thereof. So their knowledge falls through on that principle as well. Then they go further to say it should be considered whether the amount proposed for the buyback is appropriate, or if less should be bought back in order to keep OT in a more liquid position. Okay, let's see where that is going. It says, Bridget, you mentioned that yourself and Sigel will have some money left over after paying back a portion of the loan that is due, perhaps aiming to distribute enough to cover the loan repayment and to satisfy RIFSA and other investors would be more wise. Then, you look at that last paragraph and like, but in this particular case, the candidate is now advising that the distribution could be made as long as there's money left over after paying, or there's money left over, or the liquidity position of OT is not completely bad. But again, if we look at this, it goes against principles, because the decision should be made if it is in the best interest of OT, not just enough for some things. It should be made if it's in the best interest, and it's either in the best interest or not in the best interest, and that's where the discussion should come through. A decision by the board should be made if it demonstrates adoption of a stakeholder inclusive approach, i.e., no company out there should make a decision just to benefit its shareholders. They must consider other stakeholders. That is not coming through from the candidate here. And I mean, they could have also discussed whether or not this decision would be in the best interest of the company and what that could entail. So best interest is about, this company is fairly new. This company, at this stage, has been making losses in the past years, but they've only made profits in 1 year. This company has high fixed costs, such as fuel, which is volatile, which would depend on the exchange rate. Therefore, making a distribution or using this cash for a distribution would not be in the best interest of the company, because then it means we might not have money to, meet our fixed costs commitments, such as fuel. So there's a lot that the candidate could have discussed in these principles, and they don't get there. And what makes their understanding questionable in terms of what would be appropriate in relation to a response is in this conclusion, where they then say, you can do the distribution, just make sure that it is just the right amount that is needed for your loans. Just make sure that, it's an amount that would satisfy RIFSA. And if you remember, the context given behind RIFSA was that they're actually advocating for their company more than what would be best for OT as a company. So you cannot even say, because RIFSA is coming from a completely incorrect position. If you are a director sitting on the board of one company, you cannot advocate for preference to be given to another company. That is wrong. But this candidate also is not picking that up, because they are advising that a payment should be made to satisfy RIFSA and RIFSA's demand. So there's really no good understanding that is being demonstrated in relation to the issues and the proposal that has been made from a governance point of view. The board of directors need to consider if they will be influenced by the pressure from their shareholders. OT strives to achieve good governance by following King. That's just theory and a repeat of what the information gave them in the IUD. The King Code also encourages directors to act in good faith in the best interest. That's theory. There's no application. If you are going to state the principle from King, you also need to state how you are, applying that. How is it in the best interest of OT or not in the best interest of OT? How is it, or what are the items that are showing you that the directors are not acting in good faith? So that discussion is not coming through, but it's just the dump of the theory. Then in conclusion, or the last sentence, they say it is difficult to argue that the directors are doing this if they approve the share buyback. So that again is not showing much understanding or insight on the matter. If we go back and recap, we said they need to cover all three aspects of the task. I think they were aware that they needed to cover that, because they talk about the legal, which is the Companies Act. They talk about what the board of directors should consider from key issues. And then they also touch on governance, which is King, which is, all those King principles that will need to come through. So then, if we look at what they've said and whether it shows understanding in the three aspects that are there, we were not convinced about the Companies Act, because really, there are flaws as discussed in terms of their discussion on the legal requirements. Then we look at the key issues. On those key issues, yes, they identify what the board should be doing, but they don't apply to the information that has been given to them. So there's lack of application as it relates to, governance and key issues that could be there. And the board shouldn't only be considering governance as it relates to King or as it relates to other aspects of the Companies Act. The board needs to take a decision. And key issues also talks to the strategic direction that should be there. So they could have then said, well, before you make this decision, before distributing, have you considered what would show growth for OT instead of making the distribution? Have you considered the nature of our operations and whether we are able to retain the cash, whether we are able to make the cash very quickly, so that this distribution does not affect us negatively. And if you look at whether they're able to make enough cash or be profitable, they've been struggling. So the directors need to also take into account that from a business point of view, what makes sense for the business to distribute and not distribute. And that discussion is lacking from this candidate. They really don't talk about from a business side, what is it that they would need to consider? Where is the growth? Where is the nature of operations and the fixed costs that they need to meet? Are they able to make sales revenue? Are they profitable? Can they actually be fine if they distribute to shareholders? Will they be able to sustain the operations of the company, the nature of the business of the company? So that is not coming through from here. And that is why, if you take a step back, the candidate has not shown good understanding or sufficient understanding for those three aspects that were asked in this particular task, and therefore it would be graded as limited competence. So it is limited competence for this particular script. Thank you.